All right, folks. So in this lecture, I'm going to be talking to you all about Bollinger Bands, named after a guy named Bollinger. It's a technical indicator that's pretty effective in determining price point and where it may be in your near future. But it kind of gives you a bounds about where price is likely to go. We'll explain it more. Let's get into it. So what Bollinger Bands actually do is show you a standard deviation range of price action. So it basically tells you where price is likely to go. Price will not always follow a moving average, and it deviates from time to time, right? If price stayed right on a moving average, it would be pretty easy to run or trade the stock market. So what it does is it takes a normal distribution of price points in a given range of time. So say if it's 20 period, it would be in the 20 days, 20 hours, whatever you set your candles to or your chart to. And it'll tell you like where price will likely lie based on a normal distribution. If you don't understand normal distribution, you can find resources from about statistics, but it basically means if you take a bunch of random plots for a data like the price of a stock, it'll collect all those points and give you a distribution about where they lie in a sense of what's normal for that stock. So for example, if a stock in the last 20 days is trading at $60, $65, $62, $67, it will probably find a normal range between say $60 and $70. Most of the points will lie somewhere in the middle, and there will be a few outliers. That's kind of what a normal distribution is. So Bollinger Bands show you one standard deviation from the norm or the mean and two standard deviations from the mean. So one standard deviation will show you where those price points will fall 68% of the time based on what you set your indicator at, and two standard deviations will show you where price action will fall 95% of the time. Again, this is statistics. So if you don't understand the concept of standard deviation, you might want to review some statistics or statistics-based math before you continue. Okay, so Bollinger Bands themselves are typically set at two standard deviations, and so they tell you where price will fall 95% of the time. If price hits the top Bollinger Band, it will likely swing back downward toward the mean, which in this case is the standard deviation, or the simple moving average line in the middle of the Bollinger Bands. If price hits the bottom Bollinger Band, it will likely swing back upward toward the mean or the average, or in this case, the simple moving average that they put in the middle of the Bollinger Bands. The indicator puts a mean or a simple moving average of a particular period you set in the middle. That's what the indicator does for you. And it's a good indicator for telling you when it's time for price to return to a normal range. Let's look at that a little more. Okay. So what can we do with Bollinger Bands? We can change the number of standard deviations. So we can set it at one standard deviation, two standard deviations, three standard deviations. You go into the settings of the Bollinger Band and do that. It tells you the reliability of that price will be contained in those two Bollinger Bands. If you can change the time period, you can make a 90 EMA Bollinger Band for reading a quarterly range. Actually, I would make it more like 64. I'm going to change this slide, but 64 because again, these are trading days that show up on the calendar on your chart. So that excludes weekends because the market is closed. So there's really 255 candles in a 365-day year if you're on the daily chart per year. So it'll show about 255 days. And so quarterly would be more like 64 candles. But you can change, what I'm saying is you can change the period of the Bollinger Band so that you can find where price will lie in a given time period. So if you're looking quarterly, I'd probably set it at like 64. It'll show you where price will remain. Say you're on two standard deviations 95% of the time during that quarter, right? You can use Bollinger Bands with other signs of confluence like we talk about with RSI, MACD, support and resistance lines, etc. But let's look at some Bollinger Bands themselves. So on this chart, you can see This is a 2 standard deviation Bollinger Band for Apple on an hourly chart. It's set at 20 periods, so it's marking where 2 standard deviations of price lies every 20 hours on the chart. So 95% of the time, the price action will remain within the Bollinger Bands. Occasionally, like down here in the middle of the chart, it slips out of the Bollinger Band. That is a strong indication that it's going to pull back inside of the Bollinger Bands at some point in the near future. Because statistically, price is going to be contained in these Bollinger Bands 95% of the time, right? If it slips far outside of the Bollinger Band, like here on the right side of the chart, it pops out of the Bollinger Band and quickly comes back inside because there's only a 5% chance that price is going to be volatile enough to escape that range that the Bollinger Bands have set. And as you can see, it escaped toward the top Bollinger Band and got squeezed back into the Bollinger Bands and continued its, price action. So in the middle, you can see the Bollinger Bands, the 2 standard deviation lines, 2 standard deviations to the positive side of price is the blue line up here, the top Bollinger Band. The bottom Bollinger Band is minus 2 standard deviations below. And the mean line, the 20 moving average for the hourly chart, is this orange line plotted in the middle. Now, price can bounce off a Bollinger Band to the top, and that'll indicate the price is coming back down, or it can bounce off the bottom and get pushed back in. That indicates the price may be moving up. It's not certain, but most likely it will. It can also bounce off of the simple moving average. As you can see here on the right side of the chart, it bounces down off the bottom Bollinger Band up, and it cuts through the moving average, but bounces along between the top Bollinger Band and the middle line, which is the mean. So it can act as a support and resistance as well. The middle mean price can react at that level, and then it continued on its path. So it will bounce between the two Bollinger Bands, and sometimes it bounces between a Bollinger Band and that middle line. As you can see on this portion of the chart, around the 14th of this month, of this January month here, it bounced off the bottom Bollinger Band, went to the middle line, bounced back to the Bollinger Band, bounced up to the middle line, bounced down. So it was bouncing between the middle line and the bottom Bollinger Band for some period of time in a downtrend. You can use this when you find support and resistance levels, where auctions are happening in the market. At those levels, you can use it with RSI, you can use it with MACD. And in these 3 dotted lines I've plotted here, vertical lines, you can see at these 3 different dates. Let's look at the left, how we can use confluence to point ourselves to a good trade opportunity. So January 10th, 2022, it's at the bottom Bollinger Band. So there's 5% likelihood that it should be that low for those last 20 periods, those last 20 hours. It's also oversold on the RSI, and the MACD is curling up, right? These are 3 signs of confluence that price will bounce from there, okay? In the middle, we have 4 signs. We see it's hitting a support line here, right? We see that it's at the bottom of the Bollinger Band. We see that the RSI is oversold and curling back in. We also see the MACD is curling up, and the MACD line and the signal line are crossing. Those are 4 signs of confluence that price is going to move back upward. And if you took that trade, look, it went from $155 all the way to, it looks like, close to $180. So $175. So it made a $20 move on Apple. If you bought an option contract, that's a lot of money in your pocket, right? And on the third vertical line here, we have a price touching the bottom Bollinger Band, RSI curling upward from oversold, and the MACD again crossing over the MACD line to the signal line. 3 signs of confirmation, and it was approaching a support level here at the bottom of I believe that's a monthly channel I've drawn, right? I drew that channel on the monthly chart. So 3 or 4 signs of confluence telling us that the price is going up, and look what happens. The price went up for a little bit, and then it gapped up. It was a very strong reaction to all those signs telling us that maybe that stock is oversold. It's headed in an upward direction. So Bollinger Bands is another really nice tool that you can use to predict price action. If the price swings too far in a moment of volatility, either downward or upward, the Bollinger Bands act kind of like rubber supports or barriers, and they stretch for a little bit and then they push price back toward the middle. That's essentially how I like to look at it. And you can change, like I said, you can change the settings, the periods on the Bollinger Bands. You can change the number of standard deviations if you want to capture more of what's normal price action for that stock. But this is another great technical analysis tool that you can add to your toolbox to learn when good times are to trade, good trading opportunities. So I hope you guys like the video, and I'll see you in videos to come. Thanks. Have a good day.